We are Mohd Jalaludin and Muhammad Ayyub are going to explain about the stock market and the exchange rate. The stock market refers to a collection of exchanges and other venues where shares of publicly traded firms can be bought, sold, and issued. Although the phrase stock market and stock exchange are frequently interchanged, the latter refers to a subset of the former. The market of firms and the stock cost can be altogether influenced by numerous components, out of which conversion scale changes are a significant one. Monetary hypothesis clarifies that the worth of a firm ought to be affected by trade rates and financing costs. The portfolio balance method, which asserts that the causality goes from exchange rate to stock price, is one of explanation for the relationship between exchange rate and stock prices. It is based on the premise that the health of national currency can have a major impact on the market values of companies. It argues that when a country's currency weakens, its exported items become cheaper worldwide, helping growth and potentially increasing profits for enterprises when incomes are based on export. The history of the development of stock market in Malaysia dates back to the 1930s. However, it was renamed Malayan Stock Exchange in the 1960s. Following the creation of Malaysia in 1963, the stock market began to rise. The name of the exchange was changed once more to Stock Exchange of Malaysia. Indeed, the stock market served as Malaysia's and Singapore's unified trading floor. Since they were the same currency, this was referred to as exchange rate interchangeability. However, Malaysia interchangeability ended in 1973 and as a result, Singapore and Malaysia exchange were divided in the same year. Under the new system, after a name change, the Singapore Stock Exchange is now known as the Stock Exchange of Singapore. Malaysia Stock Exchange is known as the Kuala Lumpur Stock Exchange. In these last years, the COVID-19 pandemic and its unexpected growth globally created panic in Malaysian society, caused the closing of borders among the Malaysian states, and consequently significantly dropped the demand side of entry economic activity. The Malaysian stock market is among the most hit sectors in response to a reduction in the demand for stock market products and services, debate as price fluctuation and stock market volatility during the outbreak. The Bursa Malaysia and Yahoo Finance webs revealed that the development of the Malaysian stock market performance during the spread of COVID-19 is in a diminishing trend and volatile stage. COVID-19 will also have a significant impact on the value of the Malaysian ringgit as a result of panic selling by investors seeking to avoid trading in the current volatile market. The decline in Malaysian tourism and the drop in the crude oil prices will reduce the demand for the ringgit, cause its value to fall.
Our government had introduced some policy to control the flow and activity of our stock market to keep gain future profit. The example of government policy illustrated by International Travel Control or IT, stay at home requirement and debt or contract relief for household. Income support is provided to those who are unable to work or have been laid off by their employer, as well as low-income households who are qualified for direct financial compensation from the government. The policy of international travel control have a positive relation with the variable of closing stock price, where other nations cannot enter our country as a result of the travel restriction by the government to decrease the COVID-19 cases. This government policy lower uncertainty and enhance investor confidence to keep invest on our stock market. Comparison with other nations. Malaysian stock market was related to the stock market in United States. The Malaysian stock market is more sensitive compared to United States in Chinese market. Demonstrate the ASEAN 5 stock market was highly integrated with United States stock market. Based on this graph, we can see the changes of index in Malaysia market for the past few years. The graph show the movement of our stock market were drastically no changes. It remains same after and before pandemic hit our market. The performance of our stock market did not make enough profit for the past few years. For the United States market, the index 2021-22 it seems rising higher than 2019 after the full caused by the pandemic. They still can remain gain more profit. The increasement is so significant due to the increasing demand in the stock market. Also, they are using two way of market to sell and buy. It make them gain profit during the downfall and peak time. Malaysia using single markets. That's why we cannot get enough profit on our stock market during the pandemic time. Islamic perspective on stock market. The negative effect of the existence of stock market are most of the transaction are future transaction in the stock market, and also they are not a real transaction because there is no element of exchange of good item that must be handed over with payment or one of them. The majority of sellers in this market are selling things that do not belong to them and hoping the goods will be sold in the actual market. In this market, the buyer primarily purchase and resells the good that he has purchased prior to receiving the good themselves. The other side, the positive perspective of Islamic perspective are the stock market creates a fixed market for buyer and seller to meet and do the transaction, whether it is an instant or future commercial current account paper. Because the company issuing the stock does not set a fixed price for the shareholder, it also make the stock selling and current account credit to other parties.
So the conclusion is, in terms of expenditure and investment, the stock market plays an essential part in our country economy. But as for now, the COVID-19 has definitely given a huge impact on the stock market, not only in Malaysia but globally. As the stock market is vital for economic development, the government needs to intervene in creating policies and initiatives to bounce back the economy in the stock market industry. IT, SAHR, and IS all have a favorable and considerable impact on stock values. As a result, the strategies outlined above may be an effective way to enhance economic activity and stock market performance in the event of future crisis or pandemic.